At present, the mortgage industry is rife with inequality and inefficiency. As housing affordability and inventory issues persist, the opportunity to achieve the American dream is becoming harder than ever to attain.
The realtors, they don't want to deal with the poor people or the minorities. The loan application officers, they don't want to deal with certain minorities because they know it's a lot more difficult to get the paperwork through. So that process on itself has to be made easier. The bias that I have seen in the mortgage industry is that minorities or discriminated parts, I will put race, women unmarried with kids. They have a lot of constraints, and the processing, the human tends to discriminate to them because it's more difficult to explain to them, it's more difficult to reach for them. They have less time, they have less understanding, they have language barriers.
The purchase mortgage denial rate for Black homebuyers is twice as high as the denial rate for the overall mortgage borrower population in each of the nation's 50 largest metros.
Most of the minority borrowers are first-time homeowners. Simply put, it is cost and inconvenience that is causing a lot of bias and inefficiency against minority borrowers in the lending industry. So when a minority borrower is applying for a home loan, it involves a lot of manpower and infrastructure to review their complex situations and life events. This makes the lender's cost of closing a loan for a minority borrower much more expensive than that of non-minority borrowers. And it is convenient for them to deny credit for these eligible borrowers who could have otherwise had that credit.
The racial gap in mortgage lending places home ownership further out of reach and perpetuates these barriers to entry.
The racial gap in lending for minorities is keeping them from accessing generational wealth because of the disproportionate numbers that they're being declined. We all know that purchasing a home leads to an avenue to have access to equity in the home so that you can purchase another home or do home improvements so that your home can be worth more. But I think of it as something even more than just the obvious of money. If you are able to purchase a home, then you no longer have to worry about where you're going to live. So you can focus on other things like a career, education, which also leads to generational wealth. And I think that's what's important.
As the industry looks to innovate, developments in artificial intelligence and blockchain technology are providing a solution to inequality in home buying.
Blockchain is actually Web3 now. Web3 is the future of all financial transactions. Without Web3 and AI technology, it is impossible to bring equality in lending. Web3, the AI takes all the complex documents, life situations, credit of the borrower, reviews it very quickly and effectively, and takes the race and gender and income or complex situations out of the equation and issues you a token with a credit line on it. The minority borrower now takes this token, which has a credit value to it, and issues it to the sellers and the banks to bid on a house. So now the banks will happily acquire this token because this is not something that can be tampered with or altered, and it cannot be double pledged either. So this token is yours and yours forever. That is why this is called NFT, the non-fungible token. And this is how the low-income borrowers are given the opportunity to be homeowners.
The use of artificial intelligence creates equal opportunities for buyers. And with no contingency, each offer is as good as cash, helping to level the playing field for minorities.
The magic part about this being all AI and all being tokenized is if you did have a change in financial circumstances with Web3 technology, between the time you were issued the token and the time you made the offer or purchased the house, as long as you tell the AI, hey, this just happened, it will readjust the token, it will recalculate, and recalculate it on the spot. Then any of this other kind of biases that creep in the system go away. Because at the end of the day, human beings aren't discriminating on race or aren't discriminating on class or anything like that. Human beings are discriminating on work. Because if they have to go back to a same file more than once and again and again and again, because of complex circumstances. They're more likely to say, oh, let me just get this problem out of the way, let me just decline it.
Putting the power into the hands of the buyer, the platform opens doors to all buyers, providing more opportunities for borrowers in underserved markets.
It's creating more opportunity for all borrowers. The banking industry is self-destructive. In a way, they think they're helping themselves by doing the easy loans first and by helping only the most wealthy amongst us. But what they're really doing is hurting themselves because they're shrinking the market. Financial services are still stuck in the 19th century. To mechanize financial services, you really needed AI. AI is here. We have completely mechanized financial services. So now every single person can get the same level of service as the top 3%. And when every single person gets the same level of service as the top 3%, then you have true fair lending. Then you have economic growth across the spectrum. And then people are buying houses and investing, putting money into their communities, starting small businesses.